On 28 February, when the Middle East conflict erupted, many of us expected crude oil to rally, so it did. And at the same time, we also expect the precious metal to start firming up because of inflation many are anticipating. So the crude oil went up 72%, but instead of recovering, the precious metal came off. And I will explain why is that so. My name is Kon Hao. I will study how the different markets currently behave to uncover emerging trends, the potential trending markets of tomorrow. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. And why precious metal did not start moving after 28th of February? It is because of the expectation that the US dollars may be strengthening in the coming months. Let me unpeel the whole logic with this acronym IIUG. With I as inflation, the other I as interest rates, U as US dollars, and G as gold or the precious metal. And let me touch on the first two I, inflation. And what we commonly read from the news article is CPI, but what the Fed are looking very closely is the core PCE, stand for personal consumption expenditure. And this number at 3%, it was before 28th of Feb. So I believe that in months to come or weeks to come, when it prices in, we're going to see this PCE to go above 3%. And we all knew that uh, the federal chairman always wanted inflation to come down to below 2, range between 1 to 2%. And that's what we're seeing here in the 90s all the way to pre-COVID. The inflation data has been between 1 to 2%. Then, of course, for the core PCE or the CPI, or rather, it went up to 9%. PCE was around here. But what we're seeing here that the PCE, the core PCE, has been aging up. Now, of course, in the next few weeks, I'm expecting the core PCE to age up, and that will also maybe the incoming federal chairman, which is Kevin Walsh, he may hike the interest rate in June. So with a higher inflation data, interest rate may be going up. Now let me explain the next IIUG, which is U, the US dollars, and the relationship between the US dollars and gold. And I always view gold as beyond just a precious metal. Gold is also a currency pair. When a currency pair means that gold versus dollar, it means that when gold move up, US dollars keep coming down. And when gold come down, US dollars moving up. It's just like any currency pair. If you want to use dollar yen as an example, when dollar yen is moving up, one side is up, one side is down. Now let's look at these studies over these past few decades. During this period from 2001 to 2011, we saw that dollar index came off. But what we saw in the same period that gold went up. And during this period from 2017 to 2020, US dollars was down 20%. And the same period, the gold went up by 100%. And during this period, 2022, that was when inflation hit a high of 9%, US dollars was down, and gold during the same period, it was up. And some interesting observation here is that when US dollars was down, the gold went up multiple folds. So that's what I always view, that gold is also a hedge against the US dollars. So why after 28th of February, the crude oil went higher, whereas the precious metal seems uneventful? Because of the mid to short-term expectation that the effect of IIUG, the strengthening of US dollars, putting pressure in the precious metal market. And it seems to me there's a tug of war between using the precious metal as an inflation hedge for the long-term investors and what we just discussed, the effect of IIUG. When that happened, precious metal were likely to range bound, something like this. And this is what we're expecting, that in coming months, inflation may pick up, and Kevin Walsh is hawkish. He may hike the interest rate, and hike the interest rate, the US dollars may be strengthening, and that will putting some pressure in the precious metal market. A two opposing force in the gold prices or silver prices between the long-term inflation hedge investors and the short to mid-term traders viewing gold as a currency pair against the US dollars. And this was what I shared in February the 10th, and that was before any knowledge about what's coming up, which is the 28th of Feb. I was viewing that silver and gold perhaps will be moving in a range-bound direction. I believe that in long term, in time to come, as US dollars continue to decline, the gold and silver should break its all-time high. For gold be 5,006, silver at $121. But for the time being, because of this expectation of inflation, higher interest rate, and putting a cap of the silver, there's these two opposing force. Therefore, the precious metal may range bound. And let's look at after 10 of Feb, what's the effect here? So in fact, we're seeing some range bound that is happening. And this also means that there's some range trading opportunity in the gold and especially in the silver for the time being. And if I'm going to zoom into the 3 hours chart, we're seeing a lot of data here where we saw that there's this hammer, 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 and there's another hammer. So what I'm seeing here, I'm expecting the market to be doing a lot of volatility within some range like this, something like this. So I'm in a position to trade a range somewhere in a band of about 80, 70 to 60. I'll be a buyer. The range of 90, 100, 110, I'll be seller. I'll be trading both ends. Another scenario for you to think about is, what if inflation persists? Interest rates continue to hike and investors are not keen to buy the US dollars. Will there be such a situation? This will be a topic for another time. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great trading weeks ahead.